Welcome everyone to Rethinking Balance Sheet, and as always, faithfully every Friday at 10 a.m. we are here to guide you through understanding the balance sheet and also figuring out how to make sense of it and apply it and take some actions to enable you to have a better business and ultimately to grow and scale your business. Joining me is Ravi Navaratnam, my co-host. Ravi, welcome to the show. And as always, every Friday, tips, insights, deep dive into areas that sometimes we don't think about. What are we going to deep dive into today?
Okay, thanks, Roshan. This, as I understand, this week is 25 years of MDEC, and this program is obviously in relation to that. But talking about balance sheets, I think you got your current assets, and one of them is stocks, debtors, and so on. There's a lot of new technology out there that help that move much faster, right? Supply chain management, etc. So in terms of rethinking balance sheets today, we're probably talking a little bit more about cash management. In terms of stock management, debtor management, we talked about with CTOS last week. So this week we're having Thinesh, Lapasar, and I hope I got that pronunciation correct. I'm sure Thinesh will correct me in a short while. But again, it's back to a little bit of, we had all this SPAC discussions. We had those discussions about privatizing the big corporate issue. Glad to be back talking about, I think the word used was mom and pop shops. Now, to support the balance sheet of mom and pop shop. So we're back to the, our what's close to our heart, helping small SMEs to figure out how to manage their balance sheets better. So we'll have a great discussion, I hope, today.
Sure. So let's welcome Thinesh Kumar Asogan from Lapasar. Thinesh, welcome to the show. We have him here popping up. Hey, Thinesh, welcome to the show. Great to have you with us.
Thank you for having me. Hi, Ravi. You did pronounce it right. You did pronounce
I got it right. Okay, thanks. Easy to pronounce. That's a good name is one which is easy to pronounce.
Yeah.
And Thinesh, maybe when starting, you can kind of tell us a bit about yourself, introduce yourself, and maybe your background a little bit to help us sort of understand, and maybe a bit about Lapasar and how you guys came about.
Sure. I'll make a quick introduction about myself, and then I'll move into how we started Lapasar itself. So I'm 31 this year. I started my first company when I was 22. I moved around a lot. My dad was in the oil and gas, just retired recently. So we moved I grew up in Terengganu, moved to KL, then moved to Perak back, and then back to KL, and it was back and forth. So I had a lot of opportunities to reinvent and to experiment with different things. Got to know a lot of different kind of people. But when I came back to study in KL, I was in college, so I was receiving a weekly allowance. It was never enough, right? And so I got this opportunity to trade medical devices, freelance. So somebody told me you could just walk into clinics and hospitals, and every machine that you sold, you could earn 2,000, 3,000 ringgit, which was a lot of money for a student. So I got into that, figured out very quickly that we could sell. And by the time I knew it, started an office while still in college, my second year, hired my first 2 employees, started running that. Then by the time I graduated, I had something real to jump into, basically. And my office was in Damansara, Intan, at that time. And so we ran that till 2017, and I sold the company in 2017 to a competitor. So they bought over the entire installation base, the consumable base, and stuff like that. Now, through that experience is where we got the idea for Lapasar. So myself and 3 of my employees, we formed Lapasar together. So they became my partners. And the idea was very much through our realization of how, being a small company trying to trade medical devices, whenever we sold a lot to oil and gas, we sold a lot of corporates as well. And whenever we tried to break into larger corporates, it was always about who we knew rather than what we knew, how much were we willing to pay and stuff like that. So the idea for Lapasar was, can we create something like Lazada, right? So how you and I bought on Lazada or still buy on Lazada is very merit-based, very who has the best deal kind of thing. So that's the approach we took. Can we create a platform and help SMEs to sort of get these opportunities with corporates? So that's why we started. 2018 January, we started. Telecom Malaysia was our first client. First opportunity was given by them, and we onboarded almost 60 corporates after that. Then till March 2020, everything was well and good. We were profitable, which was quite rare for a company like us to become profitable. But then the lockdown happened, and we knew corporates are not going to operate anymore the way we know it today, and we needed to make a shift very quick, right? A pivot. And so we decided we needed a larger market first and foremost, and we picked FMCG. Low margins but big volumes, right? And we looked at the market, and we looked at the mom and pop shops, we looked at the restaurants, we looked at the hawker stalls, the independent ones, and we realized there's no tech to help them in what matters the most to them, which is profits, cash flow, sales. And we decided, look, let's go and help them buy things, just like we did for the corporates. And we made that pivot, and in June 2020, we started. Within 14-15 months, it has outgrown the corporate business. And we recently raised a round of cash as well. So that's how we sort of got into the journey of Lapasar, and how we ended up with serving mom and pop shops.
Maybe, Thinesh, just out of curiosity, when you said the corporates were not operating as usual, I thought they would have been more interested in using your platform to buy. So why the change?
So we that is more our mistake, Ravi, more than anything, right? So when we started, we told ourselves, we are nobodies. We don't know anybody. So all the deals we got were bottom-up deals, right? Purely through our ability to serve or execute or whatever. And we told ourselves, let's start with office supplies, right? Let's start with office supplies. Let's start with the tail end categories. And then let's see if we can work ourselves up to the more sensitive areas and all that. So when the pandemic hit, lockdown happened, we did not execute fast enough to move into those larger categories. And that became our downfall ultimately. So we needed to look for something else. And office supplies as a market is rather small, right?
It's probably shrunk with offices closed. Yeah,
massively.
I would have thought so. Even my office, I think the amount of paper we use, etc., just okay. I understand. It was a little bit hard to get context too when you said because I thought corporates would be buying more through it, but you're so right. Absolutely. If it was office supplies, then I can understand where you're coming. I love what you're talking about, because I think this has been something that has been topical, and in terms of making sure SME companies survive. And one of the things that when we had Rafiza from Cradle, and even after the show, we stumbled onto something called Startup UK, and it's one of these online resources that helps startups. But we know that today a lot of the companies SMEs are struggling. Yeah, of course there are some which are doing very well. It depends which part of the industry you are. There are part of the supply chain to glove manufacturer, you're probably doing very well, or you're a supply chain to somebody making masks, you're probably doing well, etc. But if you're a supply chain to many other businesses, there's just general slowdown in the economy, and obviously cost is going up with inflation. How do you see, if there was a central organization or central resource, which can connect people like Lapasar, everything else to help SMEs? Would you see that's something that we could replicate in Malaysia?
Yeah, so I have some experience in this area actually. So when I was running a medical device company, I have got very strong views as well. So I'll share them. So when I was running the medical device company, what happened was towards the end, before I sold the company because I had to, not because I wanted to. So I was running out of cash. There were a lot of new regulations in medical device and stuff like that, right? So before I sold that company, I was walking up and down, and I was looking online all day long on how to get funding, where do I get funding, where do I get loans, how do I turn this around, how do I get distributorships, how do I hire people, and stuff like that, right? And most of my research was around cash. How do I get cash to the company, right? And I applied for so many loans, and the process took so long. Some of them even government organizations, to be honest, right? And I got my approval 3 months after I sold the company, so I couldn't hold on anymore, right? So I got my loan 3 months after I sold the company. Now, speaking about a central authority or an organization who is here to help SMEs, not only with cash, probably beyond cash, right? Because I feel to first digitize SMEs or bring them into the next level, you need to solve their most basic pain points, right? Which is, do I have cash? Do I have sales? Do I have cash flow? Is my profits enough, right? So solving those would mean if a central authority or or an organization can take control, and we spoke a little bit about this, right, Ravi, before the session started. We said it cannot be the banks that are taking the collateral upfront. It has to be that central authority. It could be the government, it could be anybody else, but them taking on the risk and saying, look, we are underwriting and we're going to treat this like we're giving $150 to all citizens, right, in the country, and that money is never going to come back to them. So they got to treat it that way, and give it out that way, and I think that would work ultimately, because when a central point or a company or an organization takes this on, and they give this mandate to, say, the banks, they run a business themselves. We don't want them to fail as well. So somebody's got to take on the collateral, right? So I think it would work if it works that way, where the government takes on the first loss.
Yeah, absolutely correct. And I think, but we're also looking at, I think the other thing which came pretty close on that is that, if it's a specialist organization, I suppose it's more easier for them to help people. I mean, I think if you look at startup, I think it started in 2005. And I think you just get better and better at what you do, right? I mean, day one, maybe we would not be that great, right? But, 6 months, 12 months, that's probably how these things work, isn't it? Yeah.
Like any other business, right?
Yeah. You learn as you go along, right?
Yeah.
And I think that's sometimes, they're always looking for the perfect solution on day one. That doesn't exist in the real world.
Yeah, of course. Yeah. But we've got to start with the most important problem on day one. And to me, that is the financing. The financing.
Yeah. And I think one of the things that also, I think, today, of course, there's all sorts of studies which says, SMEs in trouble. But really, I don't think there's a central point that actually picks up and says, well, what exactly is the problem? Is it I can't get sales? Is it I can't get lines of financing? Is it I can't? And what's been tried and what's worked and what's not worked? But in terms of your business, and if I were to ask you, how would you be able, if I'm in difficulties, what could you help me as an SME in terms of, improving my balance sheet and stuff like that? Well, what could you do for me?
Right. So as Lapasar, you mean, what do we do for our clients?
Yeah.
Let me tell you a little bit of how we started the wholesale business. We did not build technology. We did not do anything fancy. We did not go and talk to technology to these mom and pop shops. What we did was we hired 6 people. We gave them receipt books, and we told them go and take orders on the ground, right? And talk to them and understand what their problems are, understand why they are frustrated, or why would we even have an opportunity to gain market share, right? So we sent them out. We went out ourselves. We did all the deliveries, and how we started was buying from wholesalers. So we bought the onions, the garlics, or whatever, and we sent it to the shops. And in this process, we met almost 6,000 people before we even started thinking about technology. 6,000 shops. And this is what we found, Ravi. We found that the shops have 3 main problems. Number one, they do not have access to consistency. And as vague as that. So what I mean by consistency is there's no way a small shop can wake up in the morning and tell themselves, I am going to get the 20 cartons of Maggi and the 15 cartons of Milo that I need at the price that I want. There's no way that they were able to do. So giving them that consistency is one. So as we are consolidating more and more of the shops, we are acting like the 99 Speed Mart, like the DC of 99 Speed Mart, negotiating with the larger brands, negotiating with the larger distributors, giving them this access to consistency. On top of that, we give them only a 400 ringgit MOQ, and we deliver within 24 hours. That enables JIT, just-in-time ordering. So there's no need for lines of credit, right? Now, on top of that, if you still need a line of credit, the entire process is on the Lapasar Borong app itself, right? So they get to go and upload the documents, and we're collecting so much information on them, and we're giving them instant lines of credit after just 5 orders through the app. So that's how we are helping them, basically.
Right.
Yeah.
Excellent. So again, what they previously couldn't do, they've got it in terms of a better delivery of their service. And I suppose even they've got lines of credit going forward. Now, but I know some people have said that, these kind of businesses, the tendency is one of the problems is the mom and pop shops don't pay. Do you see that kind of problem in your model?
Yeah. We did early on. We made a lot of
Right.
mistakes, Ravi, and that's why we could build a case, right? Now, the problem with that, what we identified was this, right? Giving them too much is a problem.
Right.
And that's why you need to understand what you need to give them, right? So we collect like 16 to 30 data points on every every shop that we onboard, because the first point of contact is the salesperson walking in, educating them about the application. And that's required, right? But then itself, we are collecting about 11, 12 data points already. Where's their shop? How long? How many people? Blah, blah, blah.
Yeah.
And then we onboard them. But the trick is to really understand and give them just enough. When you give them more than they need, they're going to overbuy, and they're going to fail to pay you on time.
Yeah.
And that's what we found. That happened to us a lot earlier.
Very interesting.
What is just enough?
So what is just enough? We've got to look at their entire shop layout. We've got to see how much they're buying in total, give an estimate, and then estimate how much they're buying from us on a weekly basis. 20% under or 20% more is just enough, based on
right.
Okay, that's interesting.
And that's only possible because you've collected the data, right?
Yeah,
it's
correct.
not something you know on day one. And the feedback is almost part computer, part brain. I suppose the AI is here, human intervention. And then you figure out after a while what works and what doesn't work. Yeah.
After 14 months.
I still think the human brain is the AI part of it is still very useful.
the human beings are still the AI. Yeah.
Well, Ravi will defend that to death, I think.
I think we've got a while before that anybody can figure out how to. How the brain works compared to our
absolutely, and we're thankful and blessed that we have that, right? We got a bunch of people who have a ton of questions. I thank you for shooting your questions, and for those of you LinkedIn, YouTube, Facebook, if you have any other questions, just shoot them in the comment section, and we'll try and get to them as soon as possible. With Husni, who's joining us. Good morning, Husni, and Husni says, "Hey, morning, Thinesh. It took you only from March to June to change the approach. How was it done? Did you consult anyone before deciding how did you do it in such a short time?"
Right. So that was March 2020 to June 2020. See, Husni, thanks for the question, Husni. We already started noticing this trend in March itself. Yeah. So we were quite well aware that in the region, and there was this startup in Indonesia called Bizzy, BIZZY, that does exactly what we do. They started with the corporates, pivoted into FMCG. We saw their story. We saw people like Gudang Ada raising cash. We saw people like Ralali raising cash. People like Telio in Vietnam raising cash. So the trend was towards how can we use purchasing technology, not for large corporates, but for smaller retailers, where the market size is bigger and the growth is much faster. We already saw this. We started speaking to a lot of VCs. We wanted to raise cash, right? We were panicking. We didn't know what was going to happen to us, so we wanted to raise cash. We spoke to a lot of VCs, and we told them, "Look, we are exploring this. What do you think?" Right? And suddenly, a lot of people were very, very open to an investment or whatever it may be. And what happened then is we thought, okay, let's run a small experiment in March. This was in May. Let's run a small experiment, right? And if we sold 3,000 ringgit worth of goods of, I don't know what, onion or Milo or Maggi. Let's go on and make this bigger, right? And let's see if this works in Malaysia instead of only Indonesia or Vietnam. And we ran that experiment in May itself. We did about 27,000 ringgit of sales, right? This was a very small experiment. We didn't expect it. And then in June, when we ran it, we went to 300,000 ringgit, and then it just kept jumping and jumping and jumping. So up till 2 or 3 months ago, in our minds, it was still an experiment. It wasn't really, things just fell in place. It happened. People just executed. It was just an experiment here. Just up till 3 months ago, we said, look, this is a real business, and we've got to start looking into the proper metrics and stuff like that.
That's an interesting thing. You said VC. Again, that VC scene, maybe you want to explain a little bit more. Who, where, how, and how do you get into that process? I think that's
and I think there's a question from Daniel that may be somewhat related. I think he says digitization seems to be at the forefront of transformation as the pandemic has accelerated the shift from digital strategies of businesses. Have you seen a growing interest from investors wanting to back tech platforms like yourself? So I think in addition to what Ravi is asking you about VCs, I think what about investors wanting to back?
And I really need to thank Daniel. He's here every week with some very good questions.
Good questions.
I did obviously check up on Daniel a little bit. He's at Harvard, so he's obviously a very, very smart man. And thanks a lot, Daniel, for
Yeah, we should bring Daniel on. Daniel should be one of our guest speakers one day.
Perhaps one of these days. Yeah.
Thanks, Daniel. So when we started speaking to investors in March 2020, when we started panicking and stuff like that, right? What we found, I had to speak to 120, 130 investors before I could raise the cash, by the way. So it was soft, right? It was very difficult to raise cash. But this trend was very, very strong in Vietnam and Indonesia and all that. So what we saw was VCs were very, very open to funding startups in Indonesia and Vietnam by way of because of their market size, right? They're extremely big in market size. Not so much in Malaysia, Daniel. So if the question is, are they interested? Yes. Not in Malaysian startups, because for them it's more about fund size, right? So if I have $100 million fund, can I fund a company in Malaysia and get back my returns that covers the entire fund size? So in that terms, Malaysian startups find it a bit more difficult. But look, when the Malaysian investors made a move for Lapasar, and Malaysian corporates, public listed companies who invested in us last round, now it's very different, Daniel. So the international investors are way more open to putting money into the company, with not just because we are in Malaysia, because we have proven to them that, look, we can scale here, we can scale elsewhere, right? But let us build a solid business here first.
So when you're saying VC here, you're just saying you went to talk to some PLCs in Malaysia and got money, really not formal VC market per se.
No, we spoke to a lot of VCs, Ravi. And because hundreds of them said no is why we went to the
PLC. But when you're talking about VCs, it's in Singapore and Malaysia. Who would
mostly Singapore.
Okay, mainly Singapore, right? The VC market. This is a handful in Malaysia, right?
Yep.
Yeah. Okay.
And I can attest to. I mean, Thinesh, your challenge. I mean, we have the similar problem where the VC kind of looks at scale in a very, very different light, right? And I think getting that early traction and showcasing that you have the capability and the capacity to do that is going to be critical, and it's not easy in a market like Malaysia. To really get that first tranche in to get moving, and you need the cash, right? I mean, you do need the cash to get yourself moving. We have another question from Padmanathan who says, look, do you see the market for B2B platforms in Malaysia? Is there a market even for B2B platforms in Malaysia? Based on what you were saying just now on the market size being very small, should the platform be all-encompassing or industry-specific? Right. Your thoughts, Thinesh?
Yeah, my thoughts. So we tried being a all-encompassing B2B marketplace for corporates. Didn't work. We couldn't go past the office supply space. And when we got into the mom and pop space and we started specializing in FMCGs, when we understood why. Because each industry has such a unique supply chain. The FMCG works very, very differently. The brands or the Coca-Colas or the Nestle, they think very differently to, say, tools manufacturers. Very different supply chain, very different mindset, right? So Padmanathan, what I think is this, right? I don't think there can be an all-encompassing marketplace for Malaysia. There will be industry-specific. But if you look at Lapasar's roadmap, over the next 48 months, we have targeted 3 more industries to get into, besides FMCG. We think we can only do a good job in 3 more industries. So maybe I pick clinics and pharmacies, or I pick mechanic shops, for instance. But that's all I can do. That's how big we can get in Malaysia to really dominate that. So I don't think there will be all-encompassing, not over the next 10 years at least, I feel. But yeah, a company could do 3 or 4 verticals very well.
I think you hit it on the nail, actually, because a lot of stuff has got to be industry focused. There's 2 things that really, Thinesh, when you're coming back to this, is I suppose the whole idea is how you collate data. Even if we talk about a central system, how we fund, how we provide the supply chain assistance to SMEs, etc. I suppose there's a whole theme around having it going down that industry verticals, right, to understand stuff much better. Would you agree with that?
Yep. There's a process, right? And it always starts with the supply.
Yeah.
We have to understand how the supply works. What are their challenges? Do they need us? Like what we found in FMCG is they don't need us. Right?
Okay.
If I want to buy 5 million ringgit worth of Maggi, they don't care whether they sell it to me or they sell it elsewhere, because Maggi sells itself. cigarettes, they don't care, right? But who cares about our existence is our customers. So how do we make use of our customers to then steer the demand in our direction is the question. So it always starts with demand. It always starts with where do I so instead, for instance, if I want to get into the mechanic shop industry, I have to go to the lubricant oil manufacturers, understand how willing are they to work with us, what is their existing supply chain, what are their fear levels, and then only you go to the demand and understand their problem. So that's the usual process. It requires different teams. It requires different teams.
And with this pandemic, hopefully, we'll see some opening of the economy from today onward. How do you see, how do people actually get started again? And what's your role in helping people get? People are out of cash. People are out of, employees are gone. You're owing your company's rental outstanding. How do you see all this panning out?
I honestly don't know, Ravi. Sometimes these questions, I feel they are way beyond me. But I've got small thoughts, right, in what I do, right, in specific to what I do. We are serving grocery stores, right? We are serving restaurants. We are serving hawker stalls. Now,
restaurants and hawkers.
Yeah, restaurant and hawker stalls, right? They are restarting. We are quite excited about it, right? So my team is frantically working on securing kitchab and stuff like that right now.
Okay, all right.
But here's the thing, right? But when we started, we thought it's all about giving lines of credits. Let's give them lines of credits. Let's earn that 2% or 1.5%. We thought it was all about that. Here's what the market told us. They told us, I don't need your line of credit. Give me low MOQs and deliver fast to me so that I can roll my cash on a day-to-day or 2-day basis or 3-day basis. You see where they're coming from, right? And when we started doing that, what we saw is basket sizes started dropping and monthly spend started increasing, which basically means we help them make more business, right? That's what we help them do.
Basically, that's the classic balance sheet stuff that we talk about, right? Sales to debtor turnover, right?
Exactly.
Yeah, exactly. Stock to it's the DuPont analysis. We just went through that for a particular client of us, and you can break it down into that. And so you're actually helping with the sales to asset turnover, be it stock, be it cash, etc. That's okay.
So that's what we're doing, right? And if we continuously do that, say for hawker stalls that are restarting now, or we are doing it for the restaurants that are starting now, that'll be fantastic. Then once they get that into that flow, it takes about 2 to 3 weeks to get into a flow, right? Then you start talking to them about lines of credit, and naturally what we do is, because we're consolidating thousands of shops, we are already getting a better deal. So we are sort of selling it to them at a lower price already. So that helps with their profits. So that's how we think we can help. But the initial question is too broad for me. It's way beyond my pay grade right now. I think.
Probably the Ministry of Finance will call you over if you could give the answer to that. Or Central Bank. Right.
Well, we have a quick comment from David, who I think also David Leo, who consistently. So he said, hey, I think there's been a barrage of webinars and talks recently because of the Tech Week this week. So again, I hope we are different. But one of the comments I think he makes, and love to hear your thoughts, both Ravi and Thinesh, is the consistency is always indicating the success stories always had a symbiosis relationship with phenomenal founders, and they consistently share how hard getting access to funds are, even with VCs here. I think that's the truthful statement. Your quick thoughts, and maybe Thinesh, you can add to what you think that how Lapasar, I think, is helping to. Maybe it's these strategic partnerships that you're intending to form with government agencies also. But how you intend to maybe address some of these concerns that David brings up?
You mean the concern of
cash being a tough?
It's tough to raise cash, right? Basically.
Yeah.
Now, there's two ways to raise cash, right? Ultimately, you can raise debts. There are plenty of alternative lenders that have made things so much better. I'm a big fan of people like Funding Society. I'm a big fan of people like Aspirasi, who have really, really made it so much easier than it was 3-4 years ago, right? To get alternative lending and all that. And we take a lot of debts loans from them as well. So huge fan of those guys. That is one way. Right? That's not that tough to get these days. I have recommended a lot of my peers, my colleagues, new businesses to go to Aspirasi, go to Funding Society. Don't even bother about the banks, right? They're not going to give it to you. They don't have the foresight to do that yet, is my view. So those guys are very good. First level done, right? And I hope it gets better. Now, I think what David is talking about is equity financing, right? That is what's tough. Now, not all businesses need equity financing, and that's the truth, right? Equity financing is for businesses that can scale 100x or just give me a sec, yeah.
Sure. Yeah, sorry, go ahead. Yeah, you had some technical problems.
Equity financing is what David is referring to. That is tough. That is very difficult to raise, particularly if you're a Malaysian only startup. If you're only operating in Malaysia, you do not have an operations elsewhere, you do not have a roadmap that states that you're going to go elsewhere, then the market size itself becomes a constraint. It's not so much about businesses not being good enough, and I'm speaking from what I've learned from the VCs. It's about the market size, right? So do you have plans to get out of the market? And some might argue Malaysia is a big enough market. It is a big enough market. So if I have 75 billion ringgit in FMCG, if I expand that into medical, if I expand that into mechanic shops, if I expand that into hardware stores, then it's a 210 billion ringgit market. Is it not big enough? Maybe it is, right? But the VCs don't seem to see that. And they do want to hear that we are going into Vietnam and Indonesia and Thailand and so on. So that's where it becomes very, very difficult. But it requires local investors to take the bet first for equity financing, and then the international ones will come.
I think that's a given, because in the end of the day, in the local market, people will know you. Regardless what you say, perhaps Singapore is a little bit easier down the road, but in the end of the day, people who know you, it's going to be somebody here, has an understanding of the lie of the land. And that's even was true when I was in the exchange as well. People still think of running to Hong Kong and all those funny listings and so on. Yeah, it might have been a fad for a while, but over the long term, unless you're a huge company like Nokia those days and they listed, obviously the Finnish stock market is just too small for them, right? And you go to New York. But for most companies, we've heard of Genting's, we've heard of Maybank more than anybody else. Who's heard of Maybank in New York? Might have a big bank here, but who's ever heard of Maybank in New York? So again, a lot of the liquidity for stocks and so on, equities always goes to your domestic market. Yeah.
Yep.
So again, that's a critical. Usually the right way to think about it. Yeah. But just coming back to this whole issue of digitization and the government's push for digitization and so on. So how much you said you took a very different route. I think you were sharing a story with me. 6,000 guys with a book getting 6 guys to go out and talk to tons of people with books. Tell us a little bit of your journey to get this from that basic thing about, let's not go build a system. Let's go and understand the business first, and then build the system. Yeah.
Yeah. I think there was there's this very large Nestle distributor, who had the time to come and visit us in our office when we first bought, 20 cartons from him, and this guy is doing R1 billion a year, right? Wow. There's no reason for him to come and visit us. Those guys were buying 20 cartons, 30 cartons, but he heard that we are an online company. That's his understanding of it, right? These guys are an online company. That's how they label us usually. And he came and visited us just to understand how we're doing and all that. And he told us this. He said, nobody is going to use your technology. None of these kedai runcits or the shops will ever care about your technology. That's what he said. And we asked him why. He said they only care about 3 things: sales, cash flow, profit. Sales, cash flow, profit. Right? If you can solve these problems, only then they will do what you ask them to do. Is his words of wisdom with us, right? And we thought this made so much of sense, because imagine if I had not gotten my price right, if I had not gotten my delivery and service right, if I had not enabled JIT, if I had not got all of these fundamentals right, can you imagine how a shop would react if I go and say, look, this is my app, Lapasar Borong, download and buy things from here? Nobody would have done it. Nobody would have even cared about it, right? And this is the guy who taught us, look, this is how you must think about the industry. And we went and got all those things right first. We got the right suppliers, we hustled our way through the prices, we got the right prices and stuff like that. And then we slowly introduced the app, and the app then eventually had 80% adoption rate, right? Which is very good, considering what people like Unilever, BAT, or Philip Morris have done in the past. Their apps don't really take off because they only sell their products. For us,
Right.
there was an 80% adoption rate, and of course, still high touch in that sense. So we still need to call, we still need to educate and stuff like that. But about 25% of them are already low touch. They're using it themselves. And that's fantastic. We were really happy with the results in the end.
I think you hit it, business 101, solve somebody else's problem, not the
Absolutely.
IT technology that you built, which you think is beautiful.
Which in most cases is the problem. Trying to push the technology that people don't want.
And sometimes we fall in love with what we do, forgetting the perils that are out there or the problems that are out there. David quickly commented that spot on, Thinesh. Yes, PC and VC, when we have many agencies indicating that all the ecosystems are right. I agree fully with you. So this, I think, is in relation to your earlier comment. We have one more comment for Ganakaran. We'll take that in a bit. We're just going to take a quick 30-second break, and we'll be right back here on Rethinking Balance Sheets. So just stay tuned. We'll be right back here on Rethinking Balance Sheets.
What I found out, I just gentle guy, I just discovered this new learning platform they call Necole. Man, that's the real deal, I tell you, man. I just paid only $50 for 1 year subscription, and my life don't change. I don't use that how much job for this one, I tell you so. You don't believe me? I tell you, I've been saying the link after I finish this call. Guy, you remember when I tell you, say, to learn 8 hours a day for class, they tire me. This is the real solution for me right now, because I learn in bite sizes at my own time, any place, anywhere where I want to learn. And if you get content across the board, oh boy, no be play. I tell you now the real deal with this. Okay, no worry, I go send you the link. No worry, I go send you the link. We go talk later. I want the Necole Martin to go. Yeah, I go to Necole. I don't tell you now. I'm gonna tell you. Go sign up. No waste time. The link now, digitaldynamics.org. Okay, we go chat later, babe. Okay, I have to go back. Bye bye. I'm on this Necole, not the deal. Oh boy, I'm with Necole to go. No easy.
Welcome back to Rethinking Balance Sheets. We are here with Thinesh from Lapasar, and of course Ravi and I from Station Capital is here with us. And we're talking about some exciting developments. We're talking about Lapasar. We're talking about a whole range of other things. We have a comment from Ganakaran who asks these questions. Does Lapasar have the intention to expand business collaboration by bringing in small entrepreneurs as business agencies to expand the business wing in the future? Your quick thoughts.
Does Lapasar, very complicated, hold on. Does Lapasar have the intention to expand business collaboration by bringing in small entrepreneurs as business agencies? So I would assume something like, I don't know. What is your understanding of this, Roshan?
I think it's more like a franchising or a dealer situation.
Right. Okay. So no, we have not thought about this yet. One thing that we have thought about is helping the shops with sellouts, right? Now we are selling in the shop, but that doesn't end. We need to also help them sell out to consumers. And how do we do that? Are some experiments that we tend to run here and there. We are thinking about that. Not yet so much about franchising, because we don't run a customer-facing or consumer-facing business ourselves. So no, we have not thought about franchising yet. But if Ganakaran could drop me his ideas, I would be more than happy to.
There you go.
Look at this ideas,
the strategic collaboration that's about to kick off. One of the things you talked about is onboarding about 100,000 mom and pop stores, right? How you intend to do that? Seems like a huge number.
Yeah. So actually, I don't know where the 100,000 came about. Our roadmap, 48 months, is 25,000. That's what we want on board. But there are way more than 100,000 retail outlets in the country, right? Ultimately, and our roadmap. Or what we have planned is to not stay in FMCG, because the way we look at the business that we're building today is more infrastructure based. We are not building an FMCG wholesale platform per se. We're building infrastructure. So we've got the technology that came in later, right? After we got the infra, right, which is the warehousing, the logistics, and the financial services. And we used to think financial services as just lines of credit. But really what it is enabling JIT is also financial services. That's how we view it, right? So this infra, can it be replicated into different verticals is how we look at it. And if you look at the various different verticals that we are in today we are in grocery and we're in Horeca. That's where we are at, right? And these two combined itself is almost 200,000 outlets in the country. Different studies suggest different things because we rely on a few parties only, right, for this data. But yeah, 200,000 outlets there. And then we're talking about mechanic shops, which is another 50,000 or 35,000. Again, different studies suggest different things. Clinics and pharmacies about 10,000, so on and so forth. Now, there are a lot of retail outlets. So we want to replicate this infra into, say, 3 or 4 verticals. And how do we get to 100,000 if we can go beyond the 25? Is with, number one, funding. That's one of the ways that we want to do it, but really nailing down how we serve them, right? So they've got their needs. If we go to, say, mechanic shops, they might have different needs, and we need to understand those needs. We intend to do it the same way, understand their pain points, serve them the right way, and bring that consistency of supply, and hopefully we get there, right? But there's also a funding pipeline along with the plans of expansion. It's not purely organically. It cannot be done in a short period of time organically as well.
Fantastic.
So in
So
terms
we've,
of your,
we've
yeah, go
yeah,
ahead,
sorry,
go ahead.
just want to call out Anil from Singapore has joined us. So Anil, welcome to the show. And quick question, Ravi. I mean, this is more of a curious question, I think, for someone. Great to see you at a young age. Is there a story behind the name Lapasar? Because sounds curious to one of our viewers. Lapasar. I mean, is there a story to it? And then, sorry, Ravi, and then after that, your question.
No worries. You can finish it first, and we'll pick that.
Yeah.
No worries.
So yeah, Lapasar is basically named by a guy who told us that he's going to invest. He committed 600,000 ringgit of investment very early on, and that time it was just a PowerPoint presentation. We'd done nothing yet, so we found it to be a bit crazy, right? And he said, "Your name." That time we were named tenderin.my. So the idea of, I'm a small SME, I'm going to tender in my documents to the corporates and get the deals. He said, "This is not going to fly. Name it Lapasar." Right? La means the, Pasa means market, so the market.com, so lapasar.com. Yeah, that's how it came about. And we first started laughing about the name, and then we started referring to it as Lapasar and just got stuck after that. But he never invested, but the name was his biggest investment. Yeah.
Fantastic. Just one of the things that I think, a couple of questions here, right? I like the way you talk about experiments. That's exactly something that I don't know why businesses in Malaysia tend not to do. Just that idea of experimenting. I'm not sure where you picked that up, but that's something that I'm pleased to hear. The other thing is I'm just trying to understand, how does your balance sheet look like? What's on your balance sheet, and how do you look at where is it one which is just funded by waiting from creditors giving you lines of credit, or how does your balance sheet get funded as well?
So when I was first asked to join the show, I was quite nervous because the show's name is Rethinking Balance Sheet. I'm not very good with this stuff. Roshan, you were saying something, you're on mute, yeah, by the way, just to point that out, yeah, just now. But I know some basic stuff, and I'm just going to share. I know what you are asking though, so I'm quite relieved. This is going to be a
very light show. Don't ever. I think that's one thing. It's a fun show, right?
Yeah.
But we learned a lot. That's the incredible part about it.
Yeah, but anyways, I think a lot of your question has a lot to do with how we finance our inventory and stuff like that, right?
Yeah, and the time taken to receive money back, etc. Yeah.
So our inventory cycle is 14 days right now.
Yeah.
When we started out, it used to be 26, 27 days. And when we started out, we needed to pay cash upfront. But the good thing about starting out is it's very small, right? We're doing 30,000, 40,000 ringgit a month, so we could do it. Right, we had money, we were profitable, we could use that to do it. Now, as we grew bigger, we did hit problems there because our inventory cycle was going down, right? It was going from 26 days to 20 days, 21 days, and then slowly, gradually now hitting 14. But in the middle, we already started exceeding the 2-3 million mark a month of sales very quickly. That was probably 6 months ago. And that's where we hit a snag, right? So we were giving out terms and we were paying upfront and we're not getting terms and stuff like that. So then that's where we got in touch with people like funding societies and Aspirasi. And we told them, look, this is our situation. We need inventory financing. And those guys started plugging in. So now about 50% of our inventory is on lines of credit, either directly from the suppliers themselves, or via invoice financing by these alternative lenders. Another 50% we manage it ourselves, right? Because obviously there's a financing charge, and we would like to avoid as much as we can. So let's say now we're doing 10 million ringgit a month just on the wholesale. At any one point, we need about 5 million ringgit of cash in the bank to finance that sort of growth. And out of that 5 million, I need only about 2.5 million ringgit of my own cash to hit that 10 million a month. So we need about 25% of cash of projected sales right now.
Fantastic. Okay, and that's basically how to rethink your balance sheet. That's exactly how it ought to be done. And on this idea of why did you get into always doing these experiments? I mean, it's not something I hear often. Was it something that you picked up, you learned, or is it just in your nature, your science background? I don't know.
No, I'm not science background. I did not go into science. No, but so experiments are quite rampant within Lapasar till today. We tend to run them on very small scales. So we would pick 1 or 2 guys to run small experiments, and it never stops. I feel like the day it stops is the scariest day of my life. Right? Yeah, stop.
No. And I think that's quite common for technology businesses today, right?
Yes.
You always kind of fail small, and then you scale, when you've kind of figured out the kind of fit or the proposition works. We've got a quick question from Daniel. It's not quick, it seems to be a very long one, but I just read it quickly. You touched on it earlier that when you were running the medical businesses, looking online for answers on how to manage the business, financing and cash injection was always the answer that everything boiled down to, providing collateral guarantee seems to be the biggest roadblock for many SMEs. Now in Hong Kong, the government has introduced special initiatives, including 100% loan guarantees. Do you think the same should be applied in Malaysia, wherein the government adopts the first? Of course, we have a question on who is the government, but besides that, your quick thoughts on Daniel's comment there.
Yeah. No, I totally agree, and I think Ravi agrees too. This is what we spoke about just now, right? The government, the 100% guarantee, and I think the government has something called CGC, right? 70% collateral by the government. Am I right there, Ravi? I don't know.
Yes, 70%, yeah, but it's always first loss to the bank, and that doesn't really work in a crisis.
Yeah, that doesn't work. Yeah. So my view is that the government needs to take on the first loss, not the banks, then mandate it to the banks as a distribution channel, right? Then they don't really care. And what I feel, and this might be very naive to feel this, right? If the government is giving out $150, $300, $500 to individuals, they should treat this the same, is my view. And I might be very, very naive to say this, but that's how in my mind at least, is that simple.
You're split on. Roshan, the question of who's the government. The government is always the government of Malaysia. It's always the government of Malaysia. You contract with the government of Malaysia. People forget this. It doesn't matter who's the administration of the day or the prime minister of the day, but the government of Malaysia is always bound by its contracts and what it does. So that one is not a difficult question. The government of Malaysia is the government of Malaysia. Who's the prime minister is a different issue.
So it's a quote from someone: investing in tomorrow's technology today is more critical than ever. It's a quote that someone shared. And as we wrap this up, right, Thinesh, if you were to leave our viewers with one nugget of wisdom or a key takeaway or a final thought, what would that final thought be? In terms of advice to our community out there.
Depends on who your listeners are. I'm not too sure, but one thing that we always do internally at Lapasar is anything that we start, we always tell ourselves that cash is not the most important thing. Starting is the most important thing. So whatever businesses or experiments that we start within Lapasar, we start it with almost no cash, right? So go and find out. I'm not going to invest any money and get things going, validate things, and then the rest handles itself. That's one. But another thing is continuously experiment. For instance, if we start selling to shops, we don't stop there. We start looking into how can we help the shop sell out, but remain very focused on the customers. I think customer obsession is very, very important. And if there's two things that helped Lapasar, it was luck, a lot of luck, and a lot of customer focus. These are the two things I believe, and those would be the two things that.
Okay, so we can't affect luck, but maybe we can affect customer focus,
Yes.
Ravi, right? And for those who don't know, Lapasar can be lapasar.com, and you can check out what Thinesh just spoke to us about. Ravi, your final thoughts as we wrap up today. What advice, what key takeaway, what sort of lessons that you learned from the dialogue with Thinesh today?
I think one of the things that Thinesh put on the nail is that it's he said that he did his business is that in understanding the industry verticals, right? Any kind of solution, even we talked about a central solution and stuff like that, has to begin to appreciate that idea of industry verticals. If not, that's just not going to work. So yeah, understanding your customers, and then in particular that how those industry verticals work, and experimenting, probably the key takeaways today. Yeah.
Fantastic. And we are in episode 23. So we've had 23 episodes. I'd like to do a call out to all of y'all, out there. I think today we have a big show, quite a few viewers watching. Who would you like to see on our next show? Share it in the comments below, and we'll try and get them. I think Ravi has access to pretty much anyone in the world, right? So we should be able to do that. And for those who for those who missed the earlier rounds, don't forget to check out Necole, right, at necole.tech or necole.app. Necole.app, you can download your copy of Necole right away. To everyone out there, thank you for tuning in to Rethinking Balance Sheet. Thinesh, really appreciate your candor and your frankness and sharing with us some of the pain points. I think some of that pain points of understanding the customer truly, right? When you break it down to the hawker stall and say, look, it's about cash, it's about profits, it's about, ultimately, how do I run my business more efficiently? If you can nail down what the key pain points is and work on addressing it, there is more likelihood for your tech to be established and push on. With that, a couple of comments coming in. Anil says customer focus is a key. Well said. Though luck is also vital. Not sure. I mean, there's some people who say that they believe that you can influence luck. So I think you can check it out. There's this concept called return on luck, how you can influence your return on luck. But again, that's for another show, another time. Thank you, everyone. Ravi, your final goodbyes and takeaway as we wrap this up.
We look forward to seeing everybody tomorrow, next week. I think we got a great guest coming in. It's from Singapore, so tune in. We're going across the causeway next week. So come and see you all next Friday. Yeah.
All right, everyone. Have a super weekend. Take care, and we will see you guys next Friday, same time, same place here on Rethinking Balance Sheet. Goodbye.
Goodbye.